Hello, Cliff Stanwick, Stanwick Real Estate, and it's the threat that I made about doing more videos. Well, I'm starting with a Facebook Live. I'm here to talk about the new real estate market, and it's here. And I think everybody has been probably overwhelmed by the circus that was 2022. And as you know, 2022 um, basically was the seller's market of epic proportion, multiple offers, houses, rent backs, as is, crazy terms, crazier prices. We saw real estate basically increase by over 45%. Uh, and now it just fell off the cliff when the interest rates went to 6 and then to 7 in October. And then the seasonality of the business has showed up. And now it's 2023, and what's going to happen is anyone's guess, right? It really is. I kind of laughed when I saw this. This was in the New York Times, was at the end of the year, and it's calling it a housing market hangover, right? A housing market hangover, I don't think uh, that would assume it was a pretty good party. I don't think it was a pretty good party. There was a lot of frustrations as inflation basically crept into everyone's life, and prices have been high, and money has been just a lot of money has been spent. So here we are, 2023, and they're calling it a hangover, and I think at the end of the day, this is, slow to start is probably uh, not a characterization as far as I can see. Basically, this market is a standoff. Okay. Well, why is it a standoff? Well, the prices have gone up 45%, in Loomis, which is where I live, and I primarily sell some homes here and into the Roseville, South Placer. The median prices are $935,000. In Roseville, California, the prices are 500 and almost $600,000, right? And these things back in 2019, the prices of these homes have gone up 50% easily since that time, right? So, but let's kind of look at what the spin is from the New York Times. And the spin from the New York Times is it's going to start off slow, which is a whole bunch of nothing, right? And basically, they're saying, hey, the pandemic created a perfect storm for driving up housing prices, and 2022 was the aftermath of the storm. And, you know, it goes into talking about the sales. But most importantly here is let's talk about the dynamics, right? The dynamics is this market's now a standoff because mortgages have basically, the monthly payments are up anywhere from 50 to 75%. You have to figure in insurance, property taxes, every other darn thing. It's expensive, right? It's probably closer to, almost doubling the payment when you figure out, a house that sold for, $450,000 is now selling for 600, and Loomis was a half a million. Now it's selling for $1 million. Well, you got $10,000, $12,000 in just property taxes, right? And plus the payment, right? You're financing, $700,000 or $800,000 at now 6.5 or 7%, right? So, the article really goes into that, there's no risk of a repeat of 2008. But there's a lot of spin with the real estate right now. And one of the spins is that comparing this housing market recession to 2008. Okay, first of all, this is not a housing market recession. This is a housing market that where sellers don't want to sell and buyers don't want to pay the prices. And there's a myriad of reasons why that is. Uh, a lot of sellers have refinanced their homes. They can't even find a rental that is not 2x what their mortgage payment is. Buyers all of a sudden the free money that was 2.5 or 3% is now 6.5%. And if you listen to the news today or you've been following the Fed, it looks like the Fed is going to continue to raise rates throughout 2023. The mortgages doubled, and we probably will see another 1 to 2 points increase by the Fed, which means we'll see mortgages probably running around 7%. So again, people aren't going to sell, right? And the other piece, which I think is fairly interesting, is, this is from my people, is essentially everyone's selling a house. The conversation is going to be very adversarial, okay? The market snapshot is the prices, the volume, existing homes are down, the prices are high, the inventory is increasing, and the bottom line is the conversations are going to be, you're gonna have two types of real estate agent conversation. One is the hopeful we can try. The other one is going to be you're going to have to sell it for 10 or 20% less than what it went for last summer. Or remember when I was talking to you last summer, we should have agreed to put your house on the market, and you've now missed the market, right? So at the end of the day, what I really wanted to share with everyone here is that the home prices are not going to budge, right? And they're not because, first of all, sellers aren't going to sell. And the other thing is that this is on Redfin, is that these people, right, the people, they are coming from the Bay Area to South Placer, okay, and Los Angeles, and believe it or not, Chicago, Illinois. But at the end of the day, this market, especially in this area, right, it was really subject to Bay Area buyers, right? I mean, that's really the situation, right? Is Bay Area buyers. They're all coming, to Roseville, South Placer, right? 14,000 searches. And that's 14,000 people looking from October to December, the last quarter, right? So again, there's still the mythical Bay Area buyer, and they did pay cash, and you have to look at the stock market being another, reason why home prices aren't going to budge. If you have cash, you can leave it in the stock market, or you can buy real estate. And I think that's going to be a dynamic of the market that you're going to see. And guess who that's really going to impact? It's going to impact, and it's going to be the people buying new homes. There's still a lot of new home construction. That was, homes aren't all of a sudden decided yesterday to build. They're already in the pipeline. These cash buyers are going to come in, they're going to buy the houses, and they're going to turn them into rentals. I had a couple clients last year, and that's basically what they did. Is some of them relocated from the Bay Area, bought 1, 2, or 3 homes in a subdivision, and ended up renting 2 and living in 1. And they sell their house for $2 million, and they can pick up a house and 2 rentals, right? So again, I don't see the prices budging. Rents, rents have gone up 25%, 30%. Anyone looking for rents, those aren't going to go down. So, people forget that California is a high demand, or I should say, this area, there's a lot of demand for real estate here, right? And California's always had a shortage of real estate. And what's happening is Bay Area buyers, they don't want to live in Fresno. They can't move up to Napa. Napa's not a good use of their money. but they come here to South Placer. Why? Because they're close to Tahoe, they're close to everything. So again, I really see this market as being will be the year the seller and buyer standoff, right? And I don't think it's going to be a good market for sellers, because they're not going to want to deal with the reality that the buyers are not going to be willing to do terms that they used to have last summer. And I also think that area buyers, local buyers, are going to be extremely frustrated because they're expecting that this market's going to roll back. And I think you have to go back to 2008 and realize that the houses have basically almost doubled or tripled since 2008. So does anyone really think that the California housing market goes backwards? I don't think so. So with that, I just wanted to say it's going to be a very challenging market. The inflation is going to be present. It's not going to be driven by energy. It's going to be driven by wages and costs of goods, commodities, not by fuel and energy like it was last year. Interest rates are not going to be backing down at all. As far as I can see, they're going to be closer to 7 than to 6. And I think we're just going to have a very dug-in market. But, if you're relocating, you're leaving the area, if you're downsizing, there will be that type of market activity. With that, I want to end this video. I want to say thank you for joining me, and leave some comments. If there's anything I can do to help you make a decision whether to buy or sell in this new exciting market, I would love to hear from you. With that, I just want to wish you a good evening and a happy and prosperous 2023. Have a good evening.